Hello and welcome to this week's edition of the RiskWire Webcast. My name is Eric Fox, Chief Economist of Veros Real Estate Solutions.
And I'm Reena Agrawal, Research Economist at Veros.
So this week we'd like to discuss Veros's recently created VeroFORECAST, which looks at our estimates for the upcoming 12 months in house prices for residential real estate. And Reena is here today to help us understand what was found during that update here just a couple of weeks ago. So Reena, first of all, what are the highlights and big takeaways of this forecast from a national level?
So basically our forecast is saying more of the same. We are predicting a modest forecast for house price growth, and specifically that is 3.2% going from Q2 2024 to Q2 2025. And we are still seeing a lot of variance, regional variance. Some markets are projected to grow at single-digit levels over the next 12 months, whereas there are other markets mostly concentrated in Florida and Texas that are forecasted to actually depreciate, but that depreciation is very small.
Well, one question that I have then is, I'm hearing and reading in the news that some people are saying that the housing market is going to crash, yet you say we expect to see more of the same at a national level, which is modest appreciation. So why are we thinking contrarian to what some are in the press are saying?
So there is a lot of talk about inventory going up, so the market is going to crash. But what we are seeing is that most of this rise in inventory is concentrated in Texas and in Florida, and that is really skewing the picture for the whole of the US. But if you look at various other markets in the US, inventory is trickling up a little bit, but it's not any substantial amount. And for the country as a whole, we have 3.7 months of inventory for May, but that continues to be well below the 5-6 months that is required for a balanced market. So there is still a shortage of supply. And in some markets like Texas and Florida, there has been a lot of construction in the recent years because of the pandemic boom. Builders built a lot of homes and now they're sitting on the market. That is why the inventory has gone up and it's now at pre-pandemic levels. So there is pressure there on prices, but we don't see that across most of the rest of the country.
That's very interesting. Well, you've mentioned Texas and Florida as being some of the markets most under pressure. So what markets are expected to perform the best?
So some of the best performing markets we are seeing in the Northeast and Midwest, like upstate New York, you have Rochester, and in Pennsylvania you have some markets. Then Illinois and Michigan have markets like Rockford, Illinois. There are a couple of markets in Indiana and Ohio as well. And on the West we are seeing some strength in markets such as the San Jose area, where there is a lot of demand for homes, but there is almost no new construction. So yes, you see regional variations, but mostly in the Northeast and Midwest is where we are seeing the highest price appreciations.
And any specific markets that you care to share in Texas or Florida that are among some of the weaker forecast markets?
So Austin is one of the markets that stands out in Texas. It was one of the highest booming markets during the pandemic years, but now we see inventory going up to 5 months there. That is because the pandemic boom has slowed down a lot. People are not moving so much. Tech sector employment has slowed down. A lot of new construction. In Florida, it's Cape Coral and Fort Myers region, which is seeing a depreciation. I think that market was also impacted by the hurricane. And after the hurricane, people have just not rebuilt, or they are rebuilding and finding it difficult to finance. Insurance has gone up a lot. So all those factors are pressuring prices in some of the Florida metros as well.
That's very interesting, Reena. Thank you for your insights. Thank you for joining us today. My name is Eric Fox.
And I'm Reena Agrawal. See you next time.